Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Markets have been coming back very strongly right from 15,183 on the Nifty back towards 15,600 in today's session, and markets have been showing some signs of a revival after a brutal sell-off which we have seen in the last couple of weeks. If you remember, on the last week I've done a video, is market correction over, where I discussed Dow Jones and Sensex long-term charts, and I have indicated that 51,000, 49,000 on Sensex tends to be a very strong support zone. We breached 51,000 levels and coming back very on a positive side, reclaiming 52,000 on Sensex as well. In this video, I'll be discussing one stock, as I've seen the title, HAL. One of the defense stock, and it's been hugely volatile in current market scenario. Should you hold or exit? Let's look at the first chart over here, which is HL divided by Nifty 500 or CNX 500. If you look at this chart, this is the ratio chart which I have been using. The ratio chart helps you to identify the outperformance and underperformance of one instrument against the other. So I've taken Nifty 500 because I want to take a broader market, being as HL is not into the Nifty 50, hence I've considered Nifty 500 considering the broader market structure, which includes large cap, mid cap and even small caps. So if you look at the HL over here, the ratio chart is going higher and higher, which means that HL is outperforming against the Nifty 500. And if you remember, start of 2022, if you look at the lows, this stock is strongly outperforming against the broader market. And if you look at the last 6 months, have been slightly painful for some of these stocks which are trending at 52-week low, and this stock trending at 52-week highs. Now, if you remember last in the yesterday's session, where stock has corrected right from the all-time high of 1972 into the last week, hitting, and this week starting on a negative note with correction of down by around 10% on an intraday basis, and closing was somewhere around 9% negative. So should you hold? I think if you look at this 2022 start, this chart indicates that HUL has been hugely outperforming against the broader market, and it may continue to outperform against the broader market. There may be some hiccups, but what are the HL charts indicating? Let's look at the second chart over here. If you look at the screen, and this is basically I'm using the technical studies which is known as VSA, volume spread analysis, and it is basically a part of Wyckoff theory. And if you look at the structure over here, yesterday's fall, which was around 9% fall, and if you look at the fall, the black arrow which has been drawn, look at the volumes onto the downside. The sell-off was with a huge volume, which means that some of the smart investors have exited their positions because looking at the volumes onto the fall, it indicates that yes, the structure seems very bearish as of now. But what are the historical charts indicating, looking at the price action with the volumes? Let's look at go back towards the start of 2020 during the pandemic fall. Now, I guess ahead of pandemic fall, if you look at the structure over here, the same rise against the volumes uptick. Now, if you look at when the structure seems that when the uptick is happening, or the momentum is very fast and furious or downside with the volumes, the stock tends to retrace. Again, 2020, the pandemic was a surprise for everyone. It was a black swan event. All the stocks have seen a huge correction. But if I look at back again in September 2020, where stocks were recovering, look at the volumes onto the uptick, where the momentum is there, where I have marked the two arrows over here. And if you look at the structure over here, back with the volumes, the price have retraced. If I look at again back in 2021 start, I guess it was Feb 2021, look at the volume uptick over there, prices going higher with a volume uptick, but there was a slight retracement over here. Similarly, if I just look at back in September 2021 and November 2021 over here on your screen, look at the prices went higher. There was an uptick with a huge volume followed by another uptick into the huge volume in November. But look at the price action again, back slightly retracing, which means that if you look at the historical move, if I just as we say in the technical analysis that history repeats itself. Whenever there is a huge volume uptick happening into the HL, there is a price retracement over there. But what is the levels of retracement? Generally it happens. Okay, let me show you one chart over here, and if you look at, this is one chart where I have plotted 200 weekly daily exponential moving average. And if you look at this 200 daily exponential moving, back in 2020 where pandemic fall happened, it tested 200 as exponential moving average. And remember, there was a huge volume, if you look at, remember the previous charts which I have shown. And every time there is a huge volume, price retraces back towards the 200 days average and heads again higher. So as an investor, if you look at back in, as I said, in May 2021, the March 2021, where was the huge volume uptake, we saw May 2021 prices testing back towards 200 days average. Start of 2022, we saw prices, end of 2022 and start of 2022, we saw prices testing back towards 200 days average. And now with a huge uptick into the volume in the yesterday's session, there is likely that price may dip to retrace the 200 days average, which is currently placed somewhere around 1450, probably around from a current level of somewhere around 1750. If I just compare, it's around somewhere around 15-18% over here. But if you look at the structure, every time 200 day price is testing around 200 days average plus or minus 5%, it gives an excellent opportunity for an investors to accumulate this stock. And again, I believe that if there is a dip into this current market scenario into the HL, I think 1500, 1450, probably comparing the plus minus 5% here and there, I believe it will be an excellent opportunity for HL investors to accumulate this stock. And at current point of time, I feel if you are not worried about 15-20% dip into the stock and looking for a long term per se, I believe you should definitely hold this stock from and this is one of the most outperforming in the defense space as well. And as we have seen, it has been consistently outperforming against the broader market space. So yes, for the technical structure, I believe it is a hold for an investor in case you have missed the rally into the HL, which have hit the new all-time high, where markets were trending at 52-week lows, around 52-week lows, and the stock hitting 1972 at 52-week high at the all-time high. This retracement could be an excellent opportunity for an investor. In case you have missed it, grab this opportunity when market tests somewhere around 1500, 1550, or probably as soon as the consolidation happen, the average might go higher. And you can look for an opportunity when averages go higher, prices consolidating around 200 days average. It will be a great opportunity for investors to accumulate this stock. So as of now, holding stays out. If you are long, hold on to your stocks, and once the market see uptick momentum, we might see HL outperformance continuing once the momentum continues onto the higher side after testing the 200 days average. Signing off, Brijesh Bhatia.